even though I have, concerns about Ethereum in the long run, I say, okay, for example, in January, I'm like, if this breaks over 1400, that's a really bullish sign. And then I kind of watch that Ethereum to Bitcoin ratio, and I kind of monitor that over time. So my overall viewpoint for this run has been that I'm somewhat tactically bullish on Ethereum, while still having kind of questions and concerns about the longer term technical details and implementations there. And so even in my January Ethereum piece that it was otherwise pretty critical, one of the things that I was pretty favorable on was EIP 1559. That was kind of the one thing I singled out as saying I actually think that's pretty elegant for Ethereum to do. And so I do think that staking and EIP 1559 have been pretty good for the Ethereum protocol, over this past year. And I actually had a conversation with Raoul Pal I think it was probably a month ago now. And basically my view was that when you have ETH2 on the horizon and you're locking up, ETH into that staking, and then you get EIP 1559, I think that, that can be pretty bullish for the price in a similar way that a Bitcoin halving, can be pretty bullish for the price. And so we've seen Bitcoin come off of exchanges until this recent correction. You had a brief period of Bitcoin going to exchanges. Now they're kind of back to coming back off exchanges. You've seen similar dynamics with Ethereum leaving exchanges and going into these more illiquid formats. And so overall, that is pretty good for the price action while it happens. And so whereas, my concerns with Ethereum are more longer term rather than say 6 to 12 month price action. So I kind of separate how I analyze price action of Bitcoin and Ethereum versus how I analyze, the fundamentals. And it's, even going back to Bitcoin, for example, when Bitcoin broke below, like, say, 46,000 back in May, I kind of issued an update to my subscribers saying, okay, I'm still long-term bullish on Bitcoin, but we're clearly seeing a risk-off environment in terms of price. And so just like when I analyze an equity, there's one story about what the fundamentals are doing, good or bad, and then there's another story about what the price is doing, good or bad. And so I kind of monitor that kind of relationship over time. And sometimes my opinion on the fundamentals and price are roughly in line, whereas other times I might have a difference of opinion between price and fundamentals. And so I think one way I'm looking at Ethereum and some of the altcoins is that I'm kind of treating them in a similar way that I would treat an equity, and it's somewhat different than how I treat Bitcoin, which is as a money. So I think that's probably if a mental model has clarified it all over the past 6 months, it's really about treating a lot of those platforms as equities in a similar way that I would treat, say, equities in the stock market.
What's your take on the crypto bull run? So is this a brief downturn, or is this going to be a more sustained bear market?
So in the near term, I don't know. And so I've been in my research service pretty much ever since it broke down. I've been kind of unclear about the near-term price action while still favorable long-term about the fundamentals. And so, with Bitcoin, for example, I was like, until this breaks over like 41, 42,000, there's not a lot of, bullish tactical indicators to kind of go by. And Ethereum, I forget exactly what price target I gave, but it was like until it breaks over this price target, I'm also just not super favorable on it. Whereas, I wouldn't, that's different than, say, selling my cold storage stuff, right? I'm not selling my cold storage stuff, but I'm also saying, like, from a 3 to 6 month perspective, until I see kind of price confirmation, I can't really be bullish. And so that is kind of separating those different time horizons. Whereas long term is really going to be about what's happening with the fundamentals, what's happening with regulatory clarity to allow pools of capital to go into those assets at a bigger way. And so I do think that, especially in 2021, we've had an inverse relationship between quality and price among tokens, right? So you've had things like Doge skyrocket, whereas, say Bitcoin and Ethereum have actually gone up less than, say, Dogecoin or Ethereum Classic and things like that. And so basically, I think you still have to have some of that froth kind of taken out from some of those periphery projects before you can see kind of sustained rises. And another thing to keep in mind is that now that Bitcoin and Ethereum and some of these other protocols, the whole space is like, big enough to be a macro asset. It's more influenced by these macro headwinds. And so, over 2020, people were getting stimulus checks that they could pile into stocks or cryptos. Whereas if those stimulus checks dry up, that's less retail money that can pour into the space. And so I think, you have the kind of this period of consolidation where you separate the good projects from the bad projects until you can build a base and have the next bull run. And so, unfortunately, it kind of comes down to the political question of, are we going to see more stimulus checks? Are we going to see more fiscal stimulus? What's going to happen with the Delta virus? I think all those sorts of things can trickle into the crypto industry now that the crypto industry is big enough to be a macro asset. So I'm kind of uncertain in the near term, while my long-term case is still really bullish. Specifically for watching the fundamentals over time and the network effects.
It seems very clear from this conversation that inflation is going to impact all of our lives in very meaningful ways, potentially very, very large ways in this future. And this is going to be an interesting decade to live through. What is your best advice for listeners?
Well, I mean, you have to hold things that you understand, first of all. You have to understand what you own. You have to understand how to value it. And then generally preference things that are real assets. And that can include, digital assets, right? Basically things that have a degree of scarcity to them that say fiat currencies don't. So I think that's going to be the story of the 2020s is, things that are scarce are going to, maintain their purchasing power, whereas fiat currencies and bonds and things like that will be debased. But from there, obviously some people are real estate experts, some people are equity experts, some people are crypto experts. And so they have to kind of, make sure that they're invested in things that they understand to a reasonable degree. The other thing I would suggest is always kind of playing the steelman approach. So I think you guys did a good job of asking me the question, if you were to steelman the transfer inflation argument, how would you do so? So until you invest in something, you shouldn't do it until you can steelman the reason why you should invest it, right? So for any asset you're buying, there's someone selling it. And so you have to make sure you understand why someone is selling it. And if you can answer why they're selling it, basically take the smartest seller of that asset, understand his or her view, and then say, what is your counter argument to that? Why would I buy it despite the fact that there are intelligent reasons to sell it? And if you can answer all those questions, that's when I think you should go ahead and buy that asset. And then, from there, separate the fundamentals from the price. So the price action is not necessarily saying what the fundamentals are doing, because the fundamentals can be doing their own thing, or price goes around. And anyone from the equity world knows that over the long run, especially value investors or long-term fundamental investors, kind of the Buffett approach type of things, that you can have, say, an asset that is, it hasn't changed year to year, but it went up 30% in price, it went down 30% in price, and it's still the same asset doing basically the same thing, but sentiment around that has changed. And obviously in digital assets, because you were earlier on in the adoption curve, because we don't know the full size of the total addressable market yet, there's a lot more volatility there. We also don't even know their regulatory clarity yet in many countries. And so you have obviously increased volatility, but that still can give you more opportunities to separate price and fundamentals and keep a closer eye on fundamentals than on price.